Well, hello folks, I'm L.A. Little and this is your daily NeoTA wrap, where we take a look at these markets and we look at it from a neoclassical perspective each time, asking ourselves just one question: what happened today? What does it tell us about the coming days? I do a show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel L.A. Little. Subscribe. Anytime content is pushed, you'll be notified. As far as what happened today, let's take a look at the numbers. Last night we were talking about the probability was that we'd see some more downside. That is what we got today. Another 0.5% down, pretty much across the board on all the major indexes. And contrary to that, we had a push up just about everywhere else. Nat gas is the only one that didn't. So oil up 4%. We had TLT, the bonds, up 1%. We had silver up almost 2%. Gold up almost 2%. Just go down the list, folks. Big spike on the commodities. Another drop in the equities. Let's look at those charts and see what they're telling us tonight. So as we look at these guys, volume expanding a little bit, still nothing big. What we did do today, and we talked about this last night, we said we were going to see if we got into those bars and tried to get into the highs of the lows. We did do that, and the real key was right there. That was what we were looking at last night, what we were talking about. That low of the breakdown bar, 20.6105. Where did we close tonight? 20.5969. So we're inside the bar, inside the top of the lows. Volume there 35.106. Volume tonight 35.432. That says that from this perspective, it can go in there and test it again tomorrow. So at this particular point in time, you got to think it's going to try to get in there one more time and see what it does. If we look at tomorrow, think about the timing here. Tomorrow's Thursday, Good Friday on Friday. No markets are open here domestically. So, that puts a lot of pressure. Tomorrow we got Yellen in the morning doing a speech, and you got the employment number on Friday. So there's a lot happening here that may or may not contribute to some more nervousness, and I suspect it probably will contribute to it, and we'll have to see how that plays out. If I look at the Dow Jones basically same thing. Looks like it's set up about the same way. Let's look at the NASDAQ. Okay, so the NASDAQ goes into that area and stays above it. So the top here, the bottom, 48.76, 48.80. So into the bar, doesn't really have the volume and doesn't stay under it. So that one actually looks like it can try to go back the other way. It's already done its test and held. NDX has been weaker. If we look at it, it's inside the bar. Doesn't have quite the same volume, but it's inside the bar. And if it can stay there, it looks like it's going to try to test the bottom. Now, the one thing that did not happen today, which actually is bearish, not bullish, is that you didn't get test of those lows. The ideal case here would have been come in there with less volume, right? Test that low, fail to break it down, flip back around, and that's not what happened. Now, it did test this low, but it's got more volume on that test. So that suggests that, NDX can go back in there and test again. Looking at the Russell. On the Russell once more continues to be the index that doesn't want to give it up. We go look at that gap. It closed at 12.2938 and 12.39, and the top was 12.40. So yeah, it did close the gap, flips around, comes back up, closes up near the high. So once more the Russell suggesting it wants to try to hold up here and not give it up. But volume heavier again, and yeah, actually the Russell looks like it can try to test again. You can test into that area one more time. So they're all set up pretty much the same way. The only one that looked a little bit different here was the composite. And let me look at it one more time just to make sure I'm looking at it right. So that low, it has more volume. Yeah, so the composite, slightly different, but it can actually be read the same way too. So nothing extreme here, but it does look like we can try and test again on the downside come tomorrow. And again, yelling in the morning, and you're off on Friday with the employment numbers. So that puts a little bit more pressure on this market with respect to tomorrow's trade. We'll come right back and look at a few more things to see if we can get a better handle on what's going to happen.
If you are serious about trading, TA Today's Tools is the perfect service to help you reach your trading goals. Go to our homepage and click Use Our Tools. Here you will find an overview of this amazing service we offer to our clients. One of the tools you will have access to is the TA Today charts. These charts visually map all the neoclassical concepts that LA writes and teaches about, and is the perfect charting service for neoclassical traders. Learn the trend of a stock you're interested in and see this stock on all 3 time frames. To get started with a free 2-week trial, go to our homepage, click Use Our Tools, and then click the free trial button.
Okay, as we come back here, we're going to take a look at the sectors together. Now, I haven't reviewed these, so we're doing them together. Again, no test on that low, so that says it can come back. Look at the volume expanding. This is on the IBB. So that sector still sucking air, so to speak. Let's look at the XLV, which is closely related, and that one breaks, and it breaks with volume. So that, to me, those two sectors look like they are going to try and trade lower. Housing's been a strong one. Let's see what it did. Actually, it didn't go back up and test, but kind of hung. So that still is okay, but not nothing to write home about. IYT hanging down here at the lows. That's kind of a dangerous situation, but it's still holding. The SOX pulls back, doesn't get into that area of danger. So SOX looks okay for a bounce. XLB. And XLB, let's grab the XLB here, and let's see what she's got. It's not too bad. It's still holding. It's still holding a retest regen, and it looks okay as far as how he's doing it. So all spikes up today, but the XLE really can't get much going, so really nothing happening there. XLE's trying to put in a bottom. It's got 3 higher lows at this point. XLF holds on, does a little bit more volume, and that one's still just hanging in a range. Really nothing there. XLI, and the XLI looks like it's finally broken. It had already broken 2 swing points. Yeah, so XLI had nothing new really. XLK, so technology, we know this has been struggling, and a little bit more volume, still holds above that key breakdown bar is low, so that one's still trading okay, nothing special, but okay. And you got a lot of reversals here today, little hammers. This one looks the best, the XLP, so that one looks pretty good. And XLY, so XLY also holding. Well, sectors really don't seem to reinforce the ideal that the market wants to trade lower. So when I look at those, I don't get a sense that we're going to push that much lower as a result of sector weakness. Let's take a look at some of the OX markets and see if there's anything there. The EM's trying to go up and hit the highs. Let's look at the currencies. The FXE. Really nothing there. FXY, Japan, a little bit of a bounce on it. Gold we saw had a big 20-buck move to the top side. Had some volume come in too. That's probably short covering. And that could be getting an ABCD structure to the upside. Let me see what silver did. Now silver's been outrunning gold lately. And let's pull up silver. And that one is about the same. Now oil got a big bounce today, and that's twice now oil's got a bounce with some volume. But again, we know that we're dealing with short covering in a lot of these cases, and you know, that's what's happening there. Let's look at the dollar right quick, and the dollar just sideways, and so it really doesn't back down, it's just hanging there. So again, just like we saw, let's look one more place while we're here, and that's the bonds, and you got a little volume into them. So the bonds, the commodities, they tend to suggest that we're going to see some more up, which is probably negative overall on these markets. So let's think about it here in terms of our final thoughts. As we come back here for the final thoughts, you know, tomorrow's really kind of a key day because when you look at these markets, you really have two possibilities. And I'm looking on the daily, and I've got the S&P up. You know, you have the possibility of trying to get to the higher high and actually finish off what has been a beleaguered attempt to do an ABC structure to the upside. And so, you know, that's still possible, but it's shaky. It's very shaky. As a matter of fact, it's so shaky that you've got just the opposite happening as well, right? The ABCD structure back the other way. So if tomorrow this thing breaks here, and certainly if it breaks down here, right, this is going to come back down and do an ABCD structure to the downside. And that structure, you know, given where the highs were, this structure is going to take it back into about the 2010 area, probably into this area. It's not the end of the world, but it's not a good thing, and it's not a good thing in multiple forms, multiple reasons. But it's, you know, it's not a done deal. You can't write the obituary until it dies, and so far this market has not died. So when I look at it and think about it from that perspective, it's like, okay, we're still basically in no man's land, right? I mean, we don't have a good sense of where this market wants to go next. There's certainly no telltale signs here of what it's going to do. And if I do the ABC, if I do the, you know, kind of the ranges, there's probably about one there, and then the one that was supposed to complete that never did. You know, those are kind of the three equidistant ones, and then you have these two, right, which are almost the same. This market stuck in the middle, right? This is in the middle. It's in the middle of everything. It's in the middle of the big ranges. It's in the middle of these three equidistant ranges. They're all the same. Market's in no man's land. Doesn't know what it wants to do. It's confused. It's confused for good reason. We know earnings are going to be bad. We know the economics still suck air. They don't look very good at all. We know that the dollar has been a problem, going to continue to be a problem. We know that the Fed is thinking about raising rates potentially still in June. And we know that Yellen is speaking in the morning. We know all those things, except for we don't know what's really going to happen yet, and the market is undecisive or indecisive as a result of that. As these things come about, Yellen tomorrow, earnings starting up, right, as those things start to take place over the next couple of weeks, we're going to get a much better picture about what this market really is going to do. And that's really where you're at. And when you're in the middle of here, you can't really make a big decision. Today's market, from what I've seen, it doesn't really tell me a high probability trade either way. I think if you're trading this, you just take and look at it in the morning and decide what to do. As far as an overnight trade, it's a toss-up. You can go either way tomorrow. That's it for this this evening. We'll take a look at it tomorrow. Of course, there's a show tomorrow. Market's off Friday. And tomorrow will give us a pretty good indication of what's going to happen. And, of course, that employment number comes out on Friday, which will be really interesting since the market's not trading, because then that may give us some volatility come next week. Folks, have yourself a great night. Take care of yourself. And until next time, I'm LA. This is and it was your daily NeoTA wrap. Have a great night, and I'll see you next time. Good night.